Senor Ortiz, we are live. Are you ready to kick this thing out, brother?
And let's do it, KT.
Let's do it.
Welcome to the AdminisTRADERS Podcast, featuring your host, Mr. Kendrick Thomas, and my co-host, Mr. Jose Ortiz. This information is used for educational purposes only.
Shout out to the disclaimer. Look, we got to make sure educational purposes only. If it don't work out, don't cuss and don't call us. What it do, KTTV? This is KT, and I'm coming at you live with another episode 4 of the AdminisTRADERS. How you doing tonight, brother?
Man, I'm good, KT. Glad to be here again tonight.
Look, man, so much information that we've been giving out. Episode 4, man, we've talked to people about Robinhood, kind of looking at some diversification, kind of looking at, so many things that we've been looking at, brother. And so as we've been going through the weeks, I have people reaching out to me and they're like, well, man, can you jump on? Can you show me this? I say, look, man, there is nothing that I can show you on one Zoom call that is going to help you. Go to the podcast, get caught up, and then come back and see me, man. Have you got any feedback? Anybody asked about the podcast or anything?
I had a couple people at work. In fact, I'm working on trying to get someone to be a guest speaker next week. So,
look,
man. So
they did not know the guest will be coming, man. Yes, sir. Yeah. Yes, sir. Look, man. Well, tonight I'm really excited for tonight. As you know, for the people who are tuning in, this podcast is a passion project for us, right? Because we live in this, we doing this, but so many people, I believe if you knew the power of investing, it would definitely change your life. So I try to get more people to take advantage of that. And this is born out of our shared belief that educators like us are some of the most remarkable individuals in the world with credible potential. Remember, we already have the consistency, right? We already have the patience because we know what we do. So the biggest piece is applying that to our rockstar stellar classrooms and bridging that gap over to some rockstar stellar stock market trading. And so anything to add to that, Jose?
I just think that, when you have that, that patience is key in the stock market, and just having that discipline, because it goes, a lot of way what we started last week with the entire risk management and, trying to, limit your risks. A lot of that is discipline. A lot of that is, sometimes you get impatient. And so getting people to understand how to flow through all of that, I think, and like you said, being in this field, you kind of already one up some of the other people who are looking to get into, investing and trading.
Yeah, and when you talk about that risk management, that is one of the biggest downside pieces. When I talk to people about trading stocks, and they're like, well, man, I ain't trying to lose my money. Man, that's gambling. And so I always tell them, it's not gambling, right? There's risk with anything. Hell, there's risk with buying a piece of bubble gum and chewing it and choking, right? So there's always risk. But the thing is, once you learn the skill of being a trader, I do believe you mitigate that risk, right? Because there are certain things that I look for now that I wouldn't even look for 3 months ago. And so then that helps me when I'm looking to go in and out of trades, when I'm looking at when is the time to buy something like VWAP. I've been learning about VWAP. VWAP has changed my life, right? Because now I know where sellers are going to sell, but I also know the prices that when buyers are going to buy. So then when it's time to double up, for instance, if I see something bounce off that VWAP, I'm buying more. But 3 months ago, 2 months ago, I would not know about that. So when you're talking about risk management, when you're talking about how much money you're willing to lose on these stocks, the biggest piece about that is learning the skill, right? I was telling Jose over the past few weeks, maybe months, I've become so engulfed in just getting better so that I won't lose my money, that I have kind of been not on social media as much, man, it's been real the last few weeks, but I'll tell you now it's starting to pay off. So just rededicating this back to you all, to you guys, to make sure that we have something good for the audience each week, man. So let's do this, man. I'm ready.
You know what?
Get this thing off, man. Yes,
and to piggyback off what you were saying is like, before we get started, I just want, people to a lot of people have this misconception that stock market, whether it's investing, trading, whatever you want to do, has to be for those who have extreme wealth. And I think that that's one of the biggest misconceptions, that people like myself didn't really get into the stock market until, like I said, 2014, because I had that misconception. I did not know that I didn't need to have thousands or millions of dollars to get into the stock market. And so, when you understand that piece, that it is for the retail investor, it is for the retail trader like us, anyone who, depending on whatever monies you have, you can get into this thing, in small chunks or big chunks, however you want to do it. And so I think that that's one of the biggest things that, the outsiders see, is that, oh man, I can't do that because I don't have all this capital. But, in reality, you can get started with $100, $50.
Yeah.
And so people don't really understand all that.
Most definitely. $50 to $100. I was talking to one of my coworkers, man. And so I was telling him, he said, look, man, I got about $50 right now. And so, of course, I went and had him buy some SQQQ, right? And I say, well, look, man, this stock market is sky high. So right now is not the time to buy nothing. You just got to hold, unless you waiting on it to fall down, because we can't go up forever. So I said, buy these 5 shares of SQQQ. If it go down to another $1 from 15 to 14, you buy more, right? Other than that, you just hold and wait. I told him, man, I'm up to like 300 right now. So I'm just waiting. When it fall down, we're going to be up. Between that and TMF, baby, we're going to be rolling.
Oh, yeah.
All right. So what we'll do, we're going to get into the show tonight. Once again, thank everybody for tuning in. Remember what I said, this is episode 4 of the Administrators. So much has been going on over the last 3 episodes. We are still taking a deep dive into Robinhood tonight. We'll actually walk you all through the process of buying a stock. And remember what we talked about tonight, risk management on top of diversification, right? So risk management is going to tell us how do we set a stop loss, which tells us if this stock goes to this amount, this is all the money that I'm willing to lose. So I'll walk you through that tonight with Jose. We will also talk about the heat map. So we're doing a lot on that heat map, kind of looking at sectors of the stock market. And so what we'll do with that is kind of show you how can you look at this map and say, okay, this part is about to get ready to take off. This part is a little slow. All of this we'll learn from simply looking at this chart tonight. So make sure you stay tuned. Then I know Jose been dropping the meat on us. So like I say, he'll pull up the PowerPoint and we'll go through some diversification tonight. So all of the things that really help you get your money pregnant, y'all, as my boy AB said, man. So make sure y'all stay tuned. What we'll do now is get into a little bit of the news. Let's look at the news for the day. All right, so in today's news, what we did was trying to look at the stock market has been kind of going crazy because there's been, since Friday, it was low volume, and we started out today with low volume. And so for that means that we don't have a lot of people that are trading. And when you don't have a lot of people trading, you don't have a lot of stocks that are being pushed. And so when you think about our mega cap stocks like Amazon, Apple has been the same price for like the last week, maybe 2 weeks, right? So not a lot of volume, a lot of people moving. So what I want to do today was kind of show you what was going on with some stocks outside of your Apples, your Amazons. And so looking at some of the stocks that made the biggest moves today. So the first one we'll start with was Foot Locker. Look, remember what we said. Buy the stocks that you live, right? So if you're a Nike person, how awesome is it to have a pair of J's, but then have some shares too, right? So when you think about where you're getting fresh, Foot Locker. So the shoe apparel retailer shared 1%. So today they were not downgraded from sell to neutral. And so remember what we said, a lot of the times the news comes out. That's what affects those stock prices, right? You got economic data, you got wars. So what happened? As soon as Citi said, we are going to downgrade Foot Locker to sell, they instantly lost 1% of the net worth, right? A next one was Carnival. Jose, you going on any cruises soon, man?
Man, I want to, but I ain't been able to book one yet.
Yeah, hey, look, it's rough. So look at Carnival. So their shares added 1.6% after being upgraded to buy from hold by Melius Research. So this firm likes Carnival transformation since the new CEO took over 1 year ago. And so remember all of the pieces that we've talked about so far. If you go back, I showed you how to research stocks, right? And so when you're researching that stock to buy, one thing you look for is who is the leadership of this company. And so when you look at Carnival, you say, why did they just get upgraded? Because of the new CEO who came in 1 year ago that is expected to take them into a compelling setup, right? Into the travel sector. So another one that we can just look at. Let's look at one or two more of these. Oh, look down there, Jose.
Oh,
Domino's, man. Look, man, I ordered some pizza yesterday, y'all. Hey, don't judge me. Don't judge me. But look, so let's look at this Domino's. What happened with Domino's? Shares of the pizza chain jumped 4.5%. So now look at how much one share of Domino's is. Man, did you know a share of Domino's is $400, man?
I did. I actually did know that. So
dude, that's like a bunch of pizzas, man.
That is a lot of pizzas.
But look at this stock price, right? So remember what we're saying. So many factors move the stock price. Today, TD Cohen hiked its price target from 410 to 430, and the stock moved 4.5%. So just think if you had 100,000 in shares, right? Think if you had 10,000. Hell, think if you had $100. Then your money just raised up by 4.5% today. I'm sorry, I don't know where y'all at, but I'll take 4 or 5% of my money growing every day. What about you, Jose?
And I sure would. And just to put that in the retail investors' terms, that 4% equates to almost a $17 jump today on a stock that was $370 going into today. So right now, Domino's Pizza, for those of you out there looking, ticker symbol DPZ, is sitting at 387.07 after that 4% jump. So, that 4%, some of you be thinking, oh man, that doesn't sound like a lot. But, when you equate it to a stock that's already, in the hundreds, that's a nice little chunk of change in one day.
Yeah.
One day, y'all.
Yeah. And another one, and I'll wrap it up after this one, but e-commerce stocks, right? So I'm not gonna lie to you, economy is getting tighter. Money needs to be stretched a little more. So what is making the money? Buy now, pay later stocks like Affirm, right? So Affirm, let's see, it says a strong Black Friday consumer shopping numbers help lift a slew of e-commerce beneficiaries. A report from Adobe Analytics showed Black Friday shoppers spent a record $9.8 billion. So money ain't tight somewhere. 7.5% increase from a year ago. And so then, but once again, look at those numbers. But look who benefited from that. Buy now, pay later stock. Right? So then people ain't really spending that money like that. They spending it and saying, let me break that up in about 4 or 5 payments because it's real out here. So, but if you know what kind of economic times you're in, doesn't it make sense that buy now, pay later after a big shopping weekend will add more than 11% of value, right? And so then they said Shopify and Etsy added 5% and 3%, but that's just a sign of the times, Jose. When you're looking at who made their money off of Black Friday, right? Cyber Monday, e-commerce stocks. So people shopping online, and then they was saying, let me put something on it. I got something on it. That's what they say today, man. Say, like, it is what it is, brother. All right. So, man, anything before we wrap that news up?
Oh, no, man, that's good stuff right there. If anybody, a while back, I used to be, one of the biggest things that you don't do is don't fall in love with a stock. And let me tell you, for a few months, a long time ago, I was in love with Etsy. Etsy was one of my favorite stocks. and I would play options on it a lot, and now it's kind of dwindled from those times of the COVID. So, but like KT was saying, anything that we can that comes through, everything's cyclical in the stock market. So, what goes up comes down, but you also have phases in which your financials, buy it now, pay it later, your retail giants, and then even your industrials, oil and gas, all of that will have its opportunity, because one of our favorite people out there always says it's a bull market somewhere. So
it's a bull market somewhere, baby. It is a bull market. Look, somebody making some money, right? You got big stocks, you got big caps, large caps, you got small caps. Today, large stocks wasn't doing it. But then who was making the money over here? You got Foot Locker, you got Domino's, right? The people you don't even talk about because you worry about Apple. Anybody like that's why we're gonna look at this heat check today. What we'll do, man, I think I want to run that Robinhood next.
Okay.
So if you can kind of get that set up, we'll take a quick break, throw in a few commercials, y'all. And if you are a Robinhood user and you got your app, you may want to go ahead and get logged into your app. So that way, when we come back, we can all walk through this thing together. I'll kind of call it out play by play. And how Jose will navigate through it on the screen. And that way we can get a little more information, look at a deeper look. And this is episode 3 of looking at Robinhood. So Robinhood is way more than just simply buying stocks and selling stocks. We went through a lot of the information that you can get, a lot of the interactive things you can do on Robinhood as far as how to learn stocks, learn your lingo. So like I say, when we get back, we will get ready to take you through buying a stock and learning how to set that stop loss so you can keep your money. All right, y'all. We'll be right back.
You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drippy, I'm fitted up. Hop in my car and the
All right, y'all. Welcome back to episode 4 of the AdminisTRADERS Podcast. I'm KT, and this is
JoJo.
That boy. Look, we about to start a whole band. We just the first two members. We're gonna bring this thing back like on Martin or something, man. But once again, y'all, just got through talking about the news. Just giving you all a recap. If you have not checked out the other 3 episodes, so much information, so much content. And what we did was we put everything into a beginner one-on-one. So if you go back, you'll be able to catch a lot of the information that we were giving out. Today, we're going to keep going into our platform probing segment. So, all right, so today we're diving into some practical strategies on the Robinhood platform. Once again, this is episode 3 of just going through that. So today specifically, we're going to go through art of buying and selling the stock and using the stop loss feature. So Jose, are you able to pull that up for the screen?
Yeah, can y'all see that on there?
No, we can't. Let me see here. Let me see.
Okay,
now put it back.
Can you see it?
All right, there we go. Yeah, that's it. That's
all
it.
Right, all right. Hello, everyone, again tonight. So, as you can see, today's small account on Robinhood, we were down $56. However, none of that transacted because I did not sell anything. So here.
Come on, man.
Here.
All right, let me go through.
Hello.
Hold up, real quick.
Wow.
Yeah, let me go through. Okay, well, some kind of way. Yeah, there we go. My screen went off. Well, I tell you, technology, bam, is a wonderful thing when it works. Okay, so Jose, what we're gonna do, man, is I'm gonna walk us through this thing. So what we're gonna do first is let's look at buying a stock. Jose, I'm gonna let you pick the stock, man.
All right, can y'all see my screen? Can y'all see me in there?
Yes.
Okay, So we're gonna do a little search. I'm gonna do a little search for gold real quick. Here's
Okay.
some stocks that come up for gold. We're gonna pick this one because this is a gold buying and selling or digging company. So here we
Okay.
go. Here's our gold. Real quick before we get started with the buying, 18 million shares traded today. The average
That's
value
volume.
is 12 million. So today's high was 1669, and as of right now, after hours, it is 1659, standing firm. All right, KT, I'm ready.
Let's do it, man. So first thing we'll do, let's initiate the stock purchase. So let's navigate to where we at and tap trade, or what does it let us do?
So on the screen, you can see on the right side, it says buy gold. So if you follow my clicker right over here, we can buy the gold. We could either trade options, or we could add it to a watch list. But right here is the buy box. It will look a little bit different on your phone, but here is the box that you want to pay attention to. And so, as we get ready to buy, make sure what we want to buy. We are looking at this list right here. So,
Whoa.
there you go. Buy order. We got a limit order. KT, stop loss order, stop limit order, trailing stop, and if you want a recurring investment, which will automatically buy it for you. Now, one of the things.
Hold up, Jose.
Go ahead.
Hold up. Before you switch those out, are you finna go through those real quick?
I'm going to go through the limit order.
Okay.
But I was going to say that I don't have a option to sell because I don't own any. So right now, since I don't own any of these, my option, as you can see right here, they're mostly the buys. We good?
Yes. Yes, sir.
All right.
Okay.
So now the one thing that Kendrick talked about earlier was your limit order and market order. So right now, the market price is $16.59, and it automatically defaults to that. So does everybody see the market order? This is what it means. This is what it is. That would be your default if you wanted to buy. But we don't want to buy it at the market price because we know that the market fluctuates. And when you have 18 million shares being sold every day, it's going to fluctuate nicely for you. So you can see here, the different prices at the different times of the day. And so, we opened up at 1640. At one point we were dipping. So that it's going to go up and down every single day. So that's why we prefer to do a limit order, because now I can pick my price.
Yeah.
Now, with that being said,
don't let them let you pick it.
Yeah, yeah. And with that being said, though, as your day gets started, if you go through the chart for the different amounts of weeks, you pay attention to when it you have dips, when you have going up, because chances are if we're going up like this did today, we're gonna see a little decrease at some point during the day. So usually, I can say from experience, is like you like to let the market do its thing for the first 30 minutes. And then you want to get in. If you are going to make any purchases, either a good time would be 9 o'clock. If you are looking to buy and hold and you want to go long term, I like to look toward the end of the day, to see what was up, what was down, to find out why. And I usually like to buy, between 2 and 3 o'clock if I can. If I'm not busy at work, that's usually the time that I like to get in there. If I'm going to hold something over, overnight or over the week. So to the limit price, you want to keep, what we would do is, let's just say that we're going to do 16, we're going to go 40. You may think, oh, well, damn, that's only a 20-cent difference. But the thing is if you do a market order and that thing all of a sudden shoots up to 17, you're going to get 17. And then if it goes back down to 16, even 1650 or 16, whatever, you've already lost money seconds after you bought it. So if you can see right here, when you go to your limit price and you want to make the order, you when I said 1640, you want to make sure that it's somewhere in this range too, or you want to take a look at this range because this is the range of what it's telling you is the bid. Bid means what people are actually wanting to pay, and the ask is what people are actually selling it for. So this is going to fluctuate, and the reason why it's only fluctuating a few cents right now is because there's a lot of volume. So the volatility is, was good, and it's also after hours. So that depending on the stock that you buy, it could be anywhere from 1 to 2 cents, all the way to 10 to 15 cents different from bid to ask. So if you put in a 1640, you also have to expect that it's not going to get filled right away, because as you can see, the bid is 1657 and the ask is 1659. So in order for it to get filled, the order, which means you actually paid for it, that's what filling the order means, it has to actually go down to that price that you put in there. So if you believe in your heart that it's going to go down to 1640 today, go ahead and put your limit price in there. If not, you want to do 1650. Anything that will, if you want it, today, you want it right now. If you're impatient, like we talked about before, you want to get closer to that bid. But just don't ever go over that bid because it will fluctuate and it will go down.
Quickly.
Right. Yeah. And so during the trading hours, you have your market hours right here. And then if you were to be trading after hours, which is, as you can see, it starts at 6 a.m. and it ends at 7 p.m. That's our time. You can trade anytime before 8:30, and as long as it's after 6 o'clock, and then after 3, as long as it's before 7. After hours. Go ahead.
I was going to say what I want to do is because we got about 3 minutes left in this segment. So let's go ahead and kind of just walk them through. So we already entered in the amount of shares that we want. So we talked about a limit order. We talked about a market order, and that's simply just saying that I'm just going to buy what I'm going to pay whatever the market says pay for it. Boom. Remember the limit order, it may fill in, it may not, but that's the next thing. So then, Jose, if you could pull up the stop loss order too.
So here we go. Stop loss order.
Yeah. So now this one, this is the threshold at when you say, I don't want to lose no more money after this. So a stop loss is basically what it is. I'm going to stop my loss, right? And so if I come in and I says yesterday, right? If I look back, I say yesterday the high of Barrick was 1665. So then I'll say, okay, I can buy a few more points up in there. Bam, I look, but I say yesterday Barrick's low was 16, maybe $15, right? And so I said, okay, I don't want to go too far under that. That is a very good stop loss, but I don't want to go too far under that, right? So then I say, if this thing goes below $15, then I say it could be going way down, right? That could be the trigger between it goes from 15 to 12.50. So if it goes to $15, I want to automatically stop my losses because I've already lost like $1 and something per share, but I had a good stop gap on it because of the data. I did my research. Boom, it hit 15. It's going to automatically sell. You will not lose any more money at that point. But if you do not, I ain't gonna talk about something. I'm gonna talk about some people here. But some people live on the edge. But if you do not set your stop loss, them risks may just come up a little heavier. What we'll do before we get into that, shout out to Ms. Perry, what it do. Also, Ms. Maturo. So she said, Jose, where is the stop order on the app? Where can she find it?
If you go to the app, and then you go, let's find that same stock.
Shout out to Miss Steele. She said she found it.
Yeah.
Yeah. So, but yeah, if you go into, okay, Jose, let me know when you get ready, and then I'll keep going. The biggest thing is carefully choose the stop price based on your risk tolerance. And remember what I said, market analysis, right? Later we'll start talking about resistance, we'll start talking about support. And so then you'll know these are the levels that we look at. So you'll say, okay, well, if it breaks, if it's already 1659, you'll say, well, if it breaks 1630, then it's headed down to what's the next level of support? It's headed down to 1620. Well, then if it breaks 1620, it's headed down to 1575. And so you got to see these points, which is what we'll teach you kind of a little going later. And that's going to be very effective for the way that you set your stop loss, right? So you maybe say, I'll go maybe about 2 points down. But then after that, I'm pretty much done. Did you have the
I do. So if you go to, let's say you do a search for that particular stock, I searched gold on there. It came up. I don't know if you can see that, but there it is right there. There's a button that will let you trade it. Because I have options trading, it's more than just a buy sell for me. So there, I click on the buy. Now, if I be in the top right hand corner, it says dollars. So in that top right corner, it says dollars up there. So what you want to do is click on that drop down, and then it'll show you can buy in dollars, buy in shares, or you have your limit order, stop limit order, trailing stop order. So that's where it is on the app when you click to buy it on the app.
She say, I got it. Thanks. No problem. Hey, that is why we are here. So we'll run through this real quick because I want to be able to take that break and get into our heat check. But so, for instance, like I said, let's say you buy a stock at $50. You may set the stop price at $45. Once again, if it sells $45, stop loss hit, activates, you're out of it, right? So now, the reason why I said sometimes we have loose ones, because if you set it too tight, remember what we said, stock market goes up, stock market goes down. It may dip down, boom, stop you out, and then take off, right? So just making sure that you account for that. I think I did that today. I set a good stop loss. NVIDIA dropped, it went up a few times, but it stayed within my range. So I was never stopped out. We'll see what happens tomorrow. God bless me. All right. So now what we want to do, Jose, let's quickly go through selling a stock. If you can pull that back up.
Well, it won't let me go through selling because I don't have any shares of that.
Okay, any shares in there?
Yeah. So what I could do is just go through selling. I could pretend I'm going to sell one of my option calls.
And will it
just so people can see that?
Okay.
Can I see my screen?
And so yeah.
All right. So one of my option calls that I have right now, I have a Apple call for it to hit $200 by January. And so, as you can see here, this is where it tells me how many I have, my price. This is what I would get if I sold it today. So 136, 135. So it'd be the same thing. Sell, and then I would adjust my price. Like, what do I want to, sell it for? How much do I want to put in? And right now it's not letting me because it's after hours, but this is where you would go to sell any stock that you have, whether it's options or stocks. You would just go to sell, and then you would type in the number that you want to sell, what it is, and then you want to review the order, and it'll get it for you. Remember, selling is the same thing as buying. You don't want to sell it for the market because the market fluctuates. So if you can see this particular option today moved $15. So it's imperative that you put that limit, set it up for a little bit higher, have the patience to let it get there. If it's a nice day where the stock is actually in the green and going up, go a little bit higher than what it is if you want, to make sure that you lock in any additional profits that could happen as you go through it. And so that's
And
how.
can you show them? Can you also show them where the stop loss is when they're selling?
So here's yours right there. So when you go here, sell to close, drop down, stop, limit order. And so
Yeah.
same thing, KT explained earlier. This is where you would set it up in case of, the lowest you would go to sell it. Correct?
Yeah, most definitely. All right.
Yeah.
And so the biggest thing, y'all, is risk management. So that's one of the biggest things that I have learned because it's nothing like losing $1,000 in one day, right? It's nothing like that feeling of saying, oh my God, when you could have lost $100, but you didn't manage that risk, right? So going back and being able to put that together, learn how to save your money. The biggest thing about traders and new stock investors is they never can keep enough capital to keep themselves in the game, right? You think about any great skill, it has to be developed, it has to be practiced, it has to be learned. But if you run out of money, you can't practice no more, right? So making sure that you are using small percentages of that account and then growing it, risk tolerance, whatever you can, that's what you do, right? So as we get ready to wrap this segment up, I would just say incorporating those stop losses in your trading strategy as that layer of risk management. It's a powerful tool to protect your investment while navigating the dynamic world of the stock market. So just keep staying with us. We'll keep talking about how to save your money, how to make sure you risk management your money. Knowledge is key. So experiment with these on your own. If you're somebody that looked into it tonight, come back. Let's talk about it next week. Anything on that before we get out of there, Jose?
I just want people to make sure that you understand when it comes to investing or trading, buying and selling, whether you buy today, sell today, or you buy and hold. No matter, like if you saw on the screen earlier, I had my account was actually down $56 today. I did not lose that money yet. So let's just, we need to make sure that people understand that no transactions actually hit your bottom line or your profit loss until you hit the sell button. So once you go through all that, and if you're up $100 and you actually sell it, then you can say to yourself and say to your friends, I made $100 or I'm up $100. If it's, if you didn't sell anything today, even though you're up, don't get it twisted and think, oh, this $100 went up, so now that's my money. It's not your money until you hit the sell button.
Cash out, cash out. Hey, that was a good word right there, good brother. I appreciate that one. So risk management, people, Google it, learn more about it. When we come back, we'll do a quick heat check, and then we'll get into a little diversification, man. We be talking, man. We be doing our thing. We'll be right back, y'all. All right, y'all. Welcome back. I know you kind of like, what the hell is that on the screen? Welcome back to the AdminisTRADERS Podcast. Me, the boy KT, and we got my boy
JoJo.
Man, you got to be ready for the call, man. What the hell on, man? Trying to get this. Man, this is the professional production here, man. Hey, look, y'all, with the y'all, if y'all don't work with us, y'all know we professional. There's quotes, air quotes right there. Y'all know how we get down. So today, we just talked about risk management. Now, what I want to get into, we talked a little bit about this last week, and I said that I will pull it in for you all. And it is the heat check. Y'all know, whenever we come to a new segment, I love to go and create something. Heat check. Damn, I feel like the heat check should be a little bit more aggressive. It's like I'm
kind of hot.
Hey, look. All right, y'all. So this is what we mean by the heat check. All right. Hold on, wait a minute. Let me take off the graphics. Let me take this whole. I need a producer. Okay, there we go. All right, so now this is the heat check, right? So this is a visual representation of the stock market. What we do when we look at this map is we want to quickly assess the performance of various stocks and market sectors. And so this role is to provide a snapshot of the market conditions at a glance, right? And so then if you look at the color coding, you see the color coded system used on the heat map, right? We got bright red, we got dark red, we got off red-ish, black looking. We got Microsoft with the green. We got a few pieces, right? And so the different colors represent various metrics. Green, typically indicating that the price increases, and we know green is go. Red for the decreases, right? And so the biggest thing is looking at the significance of the intensity of the colors, such as the darker shades, for more significant colors. So if you look down here, you can kind of see the shades. Yeah, it's kind of giving you everything. See the zero, that was that black thing. So let's look at this map real quick, y'all. All right, so remember what I said, it's broken down by sectors. So let's look at our sectors real quick. So we see we got technology, right? Let's look at these real quick. We got our technology sector. We got the semiconductors. We got our communication, which is our Google and our Meta. We got our, yeah, there we go. We got our pushers, our drug manufacturers, our Eli Lilly's, our J&J's, right? United Health. So these are our healthcare plans. All those people that come to your job, try to get you. Amazon, Tesla, consumer cyclical. I did not know that was where they were, man. But okay, so if you can see the consumer cyclicals.
Yeah, just because
yeah.
You know, consumers, you know what I'm saying?
Hey, now look at this. Berkshire Hathaway B. Y'all, I'm not gonna lie to you. I remember this stock when it was like $120 something. So, and that was a few years ago. Look at where it's at now, $361. If you could just hold, this is what happens. Then we have our banks, right? So look at our JPMs, our Bank of Americas. We got our credit services. So now let's go back and look at our map, talk a little bit more about it. I just kind of wanted to show you a little bit of that. So understanding that the market sectors is crucial for investments aiming to diversify their portfolios, right? So I remember last year, tech dropped. It dropped. Everything fell. This is where I put all my money, inside of the technology sector, where all these pieces right here, right? That's where I put it, and I'm not gonna lie to you, I came up. But the thing of it is I knew when I looked at this map, all of this was that color. So I said, where are the opportunities? Look at Google. It was down 12% today. I said, okay. I mean, 0.12. I apologize about that, but it was a small dip, right? So you saying what's going on with Google? That would pique my interest. Why did they drop today? Are people selling off? Is it about to go? Right? You come over here and you're looking what's going on. Lilly is down 1.59. So we know automatically Lilly is going. But when we come over to ABGO, and by the way, look at this stock price, $950, right? But it lost 2.92%. So if you're looking, we got a little down, we got a lot down. It gets a little bright redder, right? So, but then we come down here, we got some of our REITs, we got our utilities. So y'all see the list, right? But we got all of this. And what's going on in our utilities? They're not looking too hot over here. So what's going on with utilities? Could this be a segment where we can say, when will this sector begin to pop? What market conditions, what economic conditions will come to make that sector come to life? Then we look at the heat map. We just kind of talked about those. But the thing is, this gives us real-time data. We could come over here. So what has been, whew, my God, look at that, Jose.
No, God.
Do you see that map, man? That was last week.
Last week.
Look at the last, oh my God.
Look at Microsoft right now for the month. Man.
Look at this, y'all. Look, Apple, 13%, Amazon, 23%. If you wasn't investing, you missed this in the last month. So you think about the last month, yeah.
And you know, the good thing about that, everybody, is that if you go from that green to where today we were a little bit down, blah blah blah, that market fluctuates like that. So what you need to understand is, as we go through either this week, maybe next week, that market could be a little bit redder, and because everything that goes up does come down, and so we might have some buying opportunities pretty soon. If this is, if you're not following us on Instagram, then you didn't check out that heat map that I posted when I said, what would you do? Would you panic or would you buy, back when everything was red? And when I posted that, if anybody got into those big tickers like Microsoft, Apple, Nvidia, Google, when it was blood red, when I posted, that was a prime time example of getting in at a good time. And now look at it.
Yeah.
A week later,
I will say, Nvidia, $112 is when I bought Nvidia. Look at how much Nvidia is today. $482.42. This is year to date, people. Year to date. So that $100 went to $400, right? So just thinking about getting in, taking a leap, right? We thinking about Eli Lilly. What's been going on? A lot of the healthcare people, drug makers, have been really coming up off of the Ozempic shots, or what are the Mounjaro shots, or whatever that is, right? And so then you have, look at these people. It's been jumping over here, Eli Lilly, right? J&J been down, but they are on the way back. Oil, so looking at your oil, it's still been down over here. It's kind of rough year to date. So just looking at one of those sectors, right? But today was a very bad day, y'all. I'll just tell y'all the truth. Real talk, no pill talk. All right, so that was pretty much it. Comparing indices. So look at the indices on the heat map, which is what we just did. So explaining how the indices provide the broader perspective on the overall market health. And then also looking at how the variation among the indices offer insights into specific industries' performance. So if you think about it, we just looked at our technology, we just looked at our oil, looked at our utilities. So what we can do then, just coming over to our heat map, remember we did this. So what's been happening over the last 6 months, right? Or come over here. Remember, we're trying to look at long-term trends. What happened over the last year? What's been going on, right? So remember what I told you, those tech sectors had went down and then they came back. Look at this, Broadcom, 78% this year. Come on, people. So that's what we're doing. Use this chart, familiarize yourself with the indices, familiarize yourself with the, what you call these, man, the sectors, all of these pieces, so that you can be able to learn more about the rotation, right? Sector rotation strategies and how this heat map aids in implementing those. Remember what I said, look at what's going on around us, right? I remember when Russia first took over Ukraine, this was jumping, right? Because they was like, man, oil was getting rough because he was acting like he was going to stop selling it, right? You think about our Coke, our Pepsi, right? So just so many sectors. I want you all to really familiarize yourself with these. But then look, once again, talking about that risk management, right? So you can use this heat map with the overarching theme of risk management because the heat map assists you in identifying and managing the risk in a diversified portfolio, right? So how you can look, remember what I said, what's going on over the last 3 months, right? And so if you look at this chart, that thing was green. Right here, we green. Last 3 months, what happened? We starting to cool off, right? So that means if they are starting to cool off for Apple, Nvidia, and Google, who is about to take the lead? And so that what throws us into what's going on around us, what's happening in financial markets, what is about to come up next, because I see that these stocks are now beginning to slow down, and that means that somebody else wants to be the leader. So that was pretty much it. Anything you want to add on that?
Just so you, when Kendrick was looking at that 1 year, what I noticed, 3 sectors. We got your healthcare, your energy, and your consumer defensive, which is consumer state, which is your like Walmart, Costco, so Coca-Cola. Those are a little bit down right now due to inflation. Healthcare is down because there's not really something that's moving the market as far as any new drugs. They're coming, they're making them. And oil and gas. Everybody wants to sleep on oil and gas because we know there's a big push for electric vehicles, but they're not here yet. They're not ready yet. And so we are still in the need for oil and gas. And, with the climate around us, that is one section or sector that I know I'm paying attention to. When the price of oil fluctuates between 80, 90, per barrel, you start thinking about, man, if it dips below 80, it might be time to buy something like a Chevron, Exxon, maybe even a Devon Energy. So just keep that in mind when you think about the different sectors on the heat map, especially the way KT showed it with this year to date, year over year, and even 3 to 6 months out as well.
Yeah. Before we close, I would definitely say look at something as in look at the credit services, right? We just talked about a firm, the buy now, pay later. So look, we got Visa down today. We got MasterCard down today. We got American Express down today. But who was up? PayPal, baby. 1.13%. So then the question is, why was PayPal up? I don't know the answer, but that would very much pique my interest, right? Because remember, I'm just looking at this map and it's telling me where can I go, right? Why was this red today? Was it just people took profits? And if so, that means it's about to go back up because more people are going to come in and buy it at the next price, which if you know your APWAP, you know what that price is. All right. Just one of those tidbits, man. So make sure that you get locked in with the heat check. Make sure you're able to use that. So Fabi said, how does she get to the chart? The biggest thing you want to do is just go in and type, let me see, can you see that? No, you can't see that. Just S&P 500 heat map. Once you do that, you type in the heat map, it'll pull up. You'll be able to kind of see a little bit more about, it'll pull this up. And then we just showed you how to navigate it. So Jose, look, man, we went too hard, man. We got 52 minutes, man. 52 minutes. S&P heat map. Yeah, that's it. It is. Let me put it in the
I put it in the Google chat. In the chat box. S&P heat map. Can y'all see that? Man. Whoever's out there.
No, bro, that was the private chat, bro. I was like, I'll put it in there right now.
There we go. Oh, heck yeah.
Bro, I just put it in, bro. Okay. All right, y'all. That's what it is. All right. So, man, what you want to do, man? You want to do some, you want to kind of get into the diversification next week, man? I guess we take a break and then come back and do some closing thoughts for this time.
Yeah, that'll work. Yeah, we can talk about diversification next week. But before you get into that closing or before you go to break, I just want to make sure that people understand that when you look at that heat map or any sector in the market, you have to figure out, like KT said, what is driving it up, what is driving it down. One of the biggest things right now that we may have missed the mark in some instances with this tech is AI. And so the more and more we get behind AI, the more and more it becomes more relevant to everything that we do. Those tech stocks that are embracing it, like your Microsoft, like your NVIDIA, they are going to continue to go up, even though at times there'll be pullbacks. One of the rule of thumbs too is like if your stock is sitting at an all-time high, or if your stock has continued to go up, make sure that what you do is anything more than a 10% downfall is going to start putting you into bear market or bear territory. It's good to have a little sell-off. It's good to have a little upswing, but once you start getting into that 10%, 20% down over a month or so, you start thinking about, man, why is it continuously going down? What's going on overall in the market? And then is it time for me to get out of this and find something else? So yeah, just think about those things. And then like KT said, next week we'll talk about what it means to be diverse in your stock portfolio.
Yeah. Now look, that's why you got two different traders here. He was like, why is it going? It don't even matter to me why I'm going down. I said what I'm gonna pay and what I'm gonna lose before I even jumped in this time. Jose, he gonna try to check it and see, man, if this is a pullback. I'm saying you drop $20, I'll see you later, regardless of what's happening. Let's see here. Shout out.
Patience.
I sure appreciate it. Hey, fight. Look, man, know when to hold them, know when to fold them.
That's right.
Y'all are hilarious. Love the camaraderie. We sure appreciate it. We here.
Yeah,
Let's make some money. But if you're not having fun, what are you doing? Right? All right. So, man, let's quick break. Come back. Closing remark.
What it do, KTTV? This is KT, and I want to introduce you to my all-new streaming service, KTTV Digital. This streaming service offers more than 1,000 channels, thousands of movies, pay-per-view, and all sports packages. If you're paying hundreds of dollars for cable a month, switch to KTTV Digital and pay less than $1 a day. You heard me right, folks. All this for less than $1 a day. If you're ready to put hundreds of dollars back in your pocket, cut the cord and reach out to me on KTTV.com. 100. Free trials are available.
Ooh, I got the cable. I got the hookup. Look, y'all, we 2 years strong. So anybody around here paying, if you paying that big bag, y'all better come talk to me. For real, man. We not playing no games. All right, Jose, we about to get ready to close this thing out, man. Episode 4. I really feel like we dropped a lot of good knowledge, man. Shout out to everybody that was tuned in, everybody that was participating with it. Yeah, man, what you got as you take us out of here, man?
I want to talk about what KT said earlier about the difference in trading styles when it comes to the two of us, and even some of you out there. You have to know that about yourself. The account that you saw, on Robinhood, a lot of people, interested in the amount of money that you can make or lose or whatever, but you got to start somewhere. So what I'm doing is just making sure that we're keeping it real with the $500. We're going to fluctuate between that, and then we're going to watch that, grow together, so we can actually see the gains when it comes to the kind of investor you want to be. Are you going to trade every day? Are you going to buy today, sell today? Are you going to buy today, sell tomorrow? You're going to hold it for a month. You're going to hold it for a year. You have to understand what you are. I am fortunate, so is KT, that we can have different accounts to do that in. We have a long-term account. We have a short-term. I have an account where I'm going to flip it daily or, weekly or whatever. But you have to know what kind of trader or investor you want to be. And we hope that by episode 4 now, that's what you are starting to see, that, KT is absolutely right. We are going to be doing things differently. And, once we start doing more things with you guys, we'll have certain things that we buy and sell that we pick. And it's, you take your money whenever you see your money. You up 20% on your account, and even though that's only $50, and you happy, take it, reinvest. We'll watch it grow together. So that's what I just want people to walk away from, is that, as we continue to go through this, as we continue to talk about strategies and different things, just know what kind of trader or investor you want to be.
That's it, man. Well, look, once again, I appreciate everybody for tuning in. Another episode of the Administrators. Follow us, subscribe to the YouTube. Make sure you hit the bells, hit the notifications. Support the hustle. Please share this live. And we will see y'all next week. This is KT.
And JoJo.
Come on, man. What happened? Look, we out here. We'll see y'all next week. This is KT for KTCB signing out. 100.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTV.
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 KTTV.